Are you thinking of investing in Bitcoin but unsure where to begin? In today's video, I'll be discussing what Bitcoin is, how to invest in it, and some of the pros and cons of this potential investment. What's going on, everyone? Welcome back to Financial Knowledge, where I bring weekly investing and finance related advice. If you're new here, make sure to hit that subscribe button so you can stay updated with future content. As always, everything I mentioned in this video you can find linked in the description box below. Over the years, the popularity of Bitcoin has consistently grown over time, and with the recent spike in value, more investors have become drawn to it. But what exactly is Bitcoin? Bitcoin is an online currency that is designed to facilitate peer-to-peer trading. Traditional forms of payment require a third party in the form of a bank or government entity. They will take a cut of the payment in order to process the transaction from buyer to seller. Bitcoin aims to remove this third-party input and create a pure peer-to-peer trading system with no form of government input. This aims to improve speed, quality, and accessibility of payments. Bitcoin is produced on a global scale by computers all around the world. These computers provide detailed information on the number of Bitcoin that users have and the transactions that they've made. The public data network that tracks Bitcoin's usage is called the blockchain. It is updated on a daily scale by all the computers that produce the cryptocurrency, and it prevents fraudulent activity as all Bitcoin users have public access to the blockchain where they can see the number of Bitcoin that another user has and all the transactions that they've made. It is updated on a daily basis to make sure all information is current and valid. The use of Bitcoin has been consistently growing over time, with more and more businesses taking it as a form of payment. But investing in the currency, buying at a low price and selling at a higher price for a profit, has also become a very popular strategy for consumers. There's a few key things that you're going to need. The first one being is a wallet. There's a software wallet and a hardware wallet. With a software wallet, it's more user-friendly. Software wallets are available on your computer and phone and are useful for storing small amounts of Bitcoin. There's also a hardware wallet which costs money to buy, but it's far more secure and it's useful for storing larger amounts of Bitcoin. In terms of buying Bitcoin, there are two different platforms, either through a broker, which is a more straightforward form of investing that is more beginner friendly. It involves higher fees and allows users to sell Bitcoin directly. There are also trading platforms which are tailored towards advanced users. This is due to the complexity of the trading systems and matches buyers with sellers. But along with this complexity also comes lower fees, and when you're first starting out, it's advisable to start with the broker, and then as you become more and more accustomed to the processes involved in buying and selling Bitcoin, moving on to a trading platform. Although there are exchanges that allow you to store your Bitcoin, it is safest to withdraw your money from the exchange and store it on a hardware wallet to prevent any security breaches from happening. As in the past, exchanges have been hacked and all users have lost their Bitcoin that they've stored on the exchange platform. When it comes to investing in Bitcoin, it's a highly volatile investment that's subject to rapid fluctuations in price. Looking at the chart, you can see the high in 2017 and then the substantial drop in price coming into late 2019, and then in recent times, again, the surge in value coming into 2020. It's an investment that can 5x its value or drop in a very short space of time. It's something to consider when investing in this currency and being comfortable with these volatile changes and very much lack of predictability of where the investment will go. However, looking at the graph, you can see that in the long run, it has risen in value, but it's quite a roller coaster in the middle if you've been around invested in the currency for that long. The value of the currency is largely based on market perception and people's desire to own a piece of the currency and always being prepared to pay more than the next person for it. Bitcoin can be described as an asset that doesn't technically produce anything, the same way that a stock might, whereas the stock is tied to a business, it has cash flow, revenues, it produces a product, and there's predictability to how well the share price will grow in accordance to how well the business grows. However, this is not something that can be done with Bitcoin, and it's often a common criticism. Tangible use of Bitcoin has been increasing in the recent years, with the stores taking it as a form of payment, and even financial firms such as JP Morgan and Goldman Sachs getting involved in the currency. So who knows where Bitcoin will go in the future and what it holds, and this makes it largely a speculative investment as cash flow and growth of the currency cannot be predicted, and people often experience FOMO or fear of missing out when something like Bitcoin comes around that has such a large return potential for an invest. That wraps it up for the video. I hope you enjoyed the content and you're feeling a bit more confident about what Bitcoin is, how to invest in it, and some of the considerations you need to have if you are going to put your money into this investment. Thanks for watching, everyone. Make sure to click the links on screen.